Okay, let's explore this income statement problem related to a manufacturing business. I'll read the information you see on the screen. Artunes Inc. is in the business of developing, promoting, and selling musical talent online and with compact discs, that's CDs. The company signed a new group called Cyclone Panic on January 1st, 2008. For the first 6 months of this year, the company spent $825,000 on a media campaign for Cyclone Panic and $248,000 in legal costs. The CD production began on April 1st of 2008. Okay, Artunes uses a job order cost system. So, talking about job order cost system here to accumulate cost associated with the CD title. The unit direct material cost includes, and you can see the information here, just to the left of my mouse, blank CD is $1.40, a case is 50 cents, and the song lyric insert is 50 cents. Okay, I'll move the mouse off to the side. The production process is straightforward. First, the blank CDs are brought to a production area, and the digital soundtrack is copied onto the CD. The copying machine can copy 660 CDs per hour. And after the CDs are copied, I'm down to this paragraph here, they are brought to an assembly area where an employee packs the CD with a case and a song lyric insert. The direct labor cost given here is 20 cents per CD. Okay, then the CDs are sold to record stores, and each record store is given promotional materials, such as posters and aisle displays. Promotional materials cost $30 per store, and in addition, the shipping cost averaged 20 cents per CD. So total completed production was 275,000 units, and then they provided this information just to the left of my mouse. Number of customers, 11,700. Number of CDs sold, 233,800. And the wholesale price to the record store per CD is $12. Now, the next paragraph lets us know that factory overhead cost is applied to jobs at the rate of $330 per copy machine hour. And there were additional 68,750 copied CDs, packages, and inserts waiting to be assembled as of the end of the year 2008. All right, so what are we asked to do? Well, we're asked to prepare an annual income statement for the Cyclone Panic CD, including supporting calculations from this information. We are supposed to round the unit cost to the nearest cent if rounding is required. Okay, so now here's some hints. Okay, so what should we do? Well, we need to calculate the sales amount, and then we need to calculate the manufacturing cost per unit. We should calculate the overhead by dividing, this is the overhead cost per unit, by dividing the rate per copy machine hour by CDs per hour. Then we multiply the manufacturing cost per unit with the number of units sold and multiply sales with the commission rate. So here's the supporting calculations you need to do. They told us that the sales were 233,800 units, right there. There's where the information, at $12 each. So we know the sales are $2,805,600. Cost of goods sold are 233,800 times 310. Okay, now you may be wondering, where did that 310 come from? Well, they told us above that the blank CD was $1.40 and the case was 50 cents and the song lyric was 50 cents. If I slide up, you'll find that information here, right? There's the $1.40, the 50, and the 50. All right. And then they also told us the direct labor was 20 cents. Let's find that here. Direct labor is 20 cents per CD. So we're going to add in the 20 cents. And then we had to calculate factory overhead. And the factory overhead is $330 divided by 660. That gives us 50 cents. So if we add all those costs, that's where the 310 comes from. Now we've covered the 50 cents. What was the promotional materials? 11,200 stores times $30. $11,700. I think I may have said that wrong, times $30. So there's our $11,700. Somewhere they told us the $30. There's our $30, and shipping costs are 20 cents. Okay, so we're able to come up with the total promotional cost and the total shipping expenses, right? We've got to multiply those costs times the appropriate units, the number of stores for promotional materials, and then the number of units shipped for the shipping expenses. So from there, you need to put an income statement together. Now, I'm not going to do that, but I'm going to show you the format of it. Okay, if I slide down here, this is how we could put the income statement for the year December 31st. Sales less cost of goods sold is gross profit, and we would break out the selling expenses, and we would show any legal expenses, administrative, that gives us operating expenses. Okay, and then we could calculate income from operations. Now, if we needed to calculate and show manufacturing cost per unit, we would do that here. Okay. I think actually that I've repeated this here, so ignore these four, just assume it starts here. And that would eventually calculate our total manufacturing cost per CD. All right, just to show you that you might include that as a schedule down below. But really, we're after this income statement down to income from operations, and that's the approach you would use. So I hope you found this helpful, everyone. Thank you.